Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, November 10th, 2022. Let's take a look at the charts. I'm going to start with the weekly charts first, show the big picture, remind you of the big picture, and then we'll work our way in. Long term, this weekly chart, as you know, for the last, 5 trading days, a week ago today, actually a week ago yesterday, I had a sell signal that indicated this long-term support region in the 172.94 to 181.05 area. And it also was indicated when we settled back in, I'm looking at this chart right now, about 6 weeks ago, when we gapped below this rising speed line that is now at 278.87, this rising two-thirds speed line off the spring low. And that was a sell signal down to this channel bottom as well. So that was at the time considered kind of a 3 to 5 week sell signal, as you recall, 1 to 2 months. And then secondarily, a week ago, we had another sell signal that indicated this area. So here we are. This has been a targeted zone. If you've been watching the daily Tesla report since early October, you know this has been an objective. The 172.94 to 181.05 area is on the weekly chart to what is on the daily chart today down here at 172.44 to 180.84, and I'll show that in a moment. This is, believe it or not, bottom-picking territory, and it's also in correlation with a downside 5/8 Fibonacci here at 172.77. A is the March 2020 COVID low. B is the November 21 all-time high. This doesn't look like much of a pullback, but at the time, this was the most meaningful downside retracement that Tesla had incurred in its short life. And so, on the triple Q and the SPY, this is a significant low if you look at those charts. Anyway, 172.94, 181.05, bottom picking territory, able to contain selling, not only for the week, but through the rest of the year and even through Q1 perhaps. From here, we can rally back into this zone. Now, this descending one-third speed line should be gone. It's no longer, it doesn't exist because these are based on the low. So you take this high against this low, and that was based on the low from a few weeks ago. So this is a erase, but 278.87 is still there. And that's really all I'm going to say about this particular chart. So bottom picking territory, able to contain selling through the rest of the year. Let's go work upside from here. Here's the daily chart. I told you 172.44 to 180.84, an area that can absorb selling, as I say, on a longer term basis. So from here, if you're a 2 to 3 week options trader, you could consider buying 220, 225 out of the money calls that don't expire for at least 3 weeks. If you're an options trader who looks at more of the, the 1 to 2 month time horizon, I do think from here, the mid 260s are in reach by the end of the year. Now, we have no buy signal at play, so I'm going on a limb, essentially, suggesting as much, but because we're testing long-term support, the reality is we can recover nicely from here as we move into Q1 of next year. Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. So let's look at the upside today. First, I've got intraday resistance, nothing more than the trend line off these earlier October lows that roughly contain Tuesday's lows. We obviously broke it on Wednesday. On the way back up Thursday, may contain intraday buying. If we push through 186.49, short cover rally, I think, is possible to 198.58. 198.58 is this low from earlier October. Now, yesterday's high of 195.89 is also there, and I have this now weighted as 2 stars rather than just a 1-star session containment level, because I do think that if we close today above 198.58, one of two things would have happened. Either A, we break to a new low today and we close above yesterday's high, that's a key reversal low, or merely trading up and closing above yesterday's high. The high of the low is also a buy signal. So closing above 198.58, the early October low, I think we've got a nice short cover rally. By the end of next week, we could reach this 226.87 channel top. So rather than 2 to 3 weeks, it might be one full week if we close today above 198.58. Along the way, I'm still respecting this former channel bottom today at 208.42, able to contain intraday buying pressures, but no longer that 2-star resistance. When I take a close look at this chart, once again, closing above 198.58, respect a vicious short cover rally into next week, the 226.87 channel top, then in reach by the end of next week, where, I might add, we could top out through the rest of November and fall back into the 170s, 180s again within 2 or 3 weeks of doing so. And it would be a settlement above 226.87 that would clearly indicate then 264.12 within 2 to 3 weeks, I'd say at the most. So I'm going to cover the downside now, as I mentioned that I would yesterday, in terms of giving you the heads up of what to expect. Once again, this is the weekly chart at the top of the newsletter. By the way, this newsletter is downloadable for free. You have the link at the bottom of the YouTube channel. I'm going to go to the bottom of this page and show you two things. One is just the mere 124.66 to 136.36 objective, that if we do close, and I do want to see a weekly settlement. So yeah, we could break 172.44 today and even settle below it, but I want to see how the week fleshes out. You know, Friday afternoons have a degree of closure to them that a daily chart just doesn't. So if we settle tomorrow, Friday, November 10th, below 172.44, then yes, we go into a secondary sell signal that within 2 to 3 weeks probably would yield this channel support at 124.66 to 136.30. It can contain monthly selling pressures, and we could rally from here back into the 170s, 180s, and actually trade inside that zone for a number of weeks. But I do think there may be more than that to the downside, and I'm just going to put this out there. I'm going to scroll to the next chart. You can see this is a pretty well-defined, well-defined is really not the way I would put this, but it is a rough head and shoulders formation. And, you know, first of all, a couple things about head and shoulders, and I've been, watching them. I don't use them religiously. I like chart formations, and so when a chart formation as the 172 handle, 180 handle support is actually, the truth be told, not altogether inconsistent with what I would call the neckline. The neckline in this situation, now you could draw a trend line off these lows and call that the neckline, but is then a ill-formed or it's not a full right shoulder, let's put it that way. So I'm comfortable considering the 179.83 low off that first shoulder as the neckline. That if we close below not only 179.83 this week, but also below the 172.94 Fibonacci, which would also put us below those channel bottoms, so forth and so on. Let's just go with 172.44 for right now. If we close below it Friday, November 10th, not only 124.66, I could see us bottoming out here, heading back into the 170s, 180s, falling off again. Bottom line, by July of next year, we actually converge, these channel bottoms converge with this 23.36 March 2020 low. Am I about to say that violating this neckline will ultimately result in that? I don't want to say that. I do think 124.66 may well contain longer-term selling pressures. We'll take it 1 week at a time at that point in time. And FYI, your classic targeting mechanism for the head and shoulders, in other words, neckline from the head to the neckline minus the headline, actually takes you to about a negative 50. Takes you into negative territory. So obviously that's not going to happen. And will we fall all the way back to the March 2020 low? We might. If you, condense this chart and take a look at this rally, it is a hyperbolic rally, and we are giving it back almost at the same rate that we gained it. So these things have a way of unraveling all the way back to the point of origin. But once again, I'm not going to indicate as much. I will say, bottom line, and let's get back to the daily charts, that closing today below 172.44. Tomorrow, Friday, also below this area is a sell signal. Initially, I do have a daily chart here. By the end of next week, possibly within one trading day, 153.52, which I have as a 2-star support. And as I said earlier, over the next few weeks, we should then continue south into this 124.66 to 136.36 area where we can bottom out on a monthly basis. And if it can bottom out for a month, a lot can happen in the month. Facts on the ground, fundamentals, so forth and so on. And we'll just have to see where we are at that point in time. So I've droned on for almost 10 minutes here. Please click like and subscribe every time you watch the Daily Tesla Report. I'll be back tomorrow with Fridays. Also, watch the Daily Apple Report, and you have a great evening.